In this module, Matt Ramuzzi, who is the top dog at CapForge, which is a company based in San Diego. They're one of the top e-commerce accounting firms out there. I think they manage 700 or 800, some ridiculous number of accounts in the bookkeeping for a lot of big e-commerce sellers, including myself. Matt's going to be talking to you about some of the basics and fundamentals you need to keep in mind when it comes to bookkeeping as an e-commerce seller, especially as an Amazon seller. So I hope you get some valuable information from what he's about to share with you. Welcome, Matt.
Hey everybody, Matt Ramuzzi from CapForge Inc. Here we specialize in e-commerce bookkeeping and accounting. And today for Helium 10, just for you guys, I've got 10 accounting tips that you're gonna wanna know about for your e-commerce business. I'm just gonna run through the list. I'm gonna start from simple to all the way from basic bookkeeping all the way through some tax tips. Obviously, every situation is different. Everybody's business is different. So if you've got specific questions or need help with specific things, the best way is to reach out. We're always happy to have a free consultation, kind of talk to you about your specific needs, specific situation. But here's 10 good general tips from beginner to advanced that are going to really help you get your business on track with bookkeeping and accounting for specifically e-commerce businesses. Okay, so the very first tip that we want to talk about, and this is for people who are getting started, the best way to avoid problems is to get yourself a brand new bank account. Now, when you sign up for an Amazon account, obviously you've got to connect a bank account to it. And hopefully you've set up a bank account to connect that is totally new, is not commingled with your personal stuff or a different business that you own. You want to have this just be exclusively for your e-commerce business. When you set up, a lot of times it's really good to have your own totally separate entity, whether an LLC or an S Corp or a limited company, depending on where you're at in the world. But you want to have, for sure, even if it's a sole prop and you haven't set up a separate legal entity, have a brand new bank account to use. You're going to be able to track your inventory and your deposits and the spend on the business much better than if it's commingled with some other account that has other stuff going into it, either other history from another business or personal stuff or whatever. Same thing goes for a credit card. The best thing you can do, you're probably not going to be able to get a brand new credit card for a brand new business in the credit card in the business's name. But what you can do is take a personal credit card that you have and stop using it for anything personal and just use it for the business. Either a credit card you newly signed up for, so there's no history, or if it is one you've used in the past for other businesses or personal expenses, then stop using it for that. Give it a week or so of no transactions just to kind of make a clear line in the sand as to where you started using it for the business, and then just use it for the business. Don't use it if you're getting gas for the car, going out to grab a bite to eat or something. Just use it for business expenses. By not commingling, even before you set up proper accounting or do anything else, it's going to make your life much easier to be able to say just this bank account and this credit card is all business, and you're not going to have to go through 6 or 7 different accounts to try and find all your different business expenses. So new bank account, new credit card when you set up your new business. Okay, so second thing, kind of in the same genre, not to commingle. A lot of times we see clients who have had a different business before, or they did a consulting business and now they're launching into e-commerce, or they've just got 2 or 3 e-commerce businesses going and they run them all through the same account. That just makes it much harder to kind of tell how each individual business is performing. So tip number 2 is don't commingle. Set up a separate account for each business that you have, whether multiple e-commerce businesses or multiple just other kinds of businesses, or even for your personal stuff. One account for one business works great. And it really makes a difference in making sure that nothing gets missed, nothing gets overlooked, you don't miss any tax write-offs or deductions that you should be getting because you forgot it was on some other card that you forgot to include. So no commingling, that's key. Also really helpful when down the road you go to sell the business. If you've got 2 or 3 businesses run under one entity and one set of accounts, it's much harder to pull out what doesn't go with the sale than if each entity is one brand and each account only goes with one brand. Then when you go to sell, it's much cleaner. You can say everything on this bank account is only for this business, and you're not having to share personal details or details of other businesses in with what you're trying to sell. All right, Third tip, track your startup costs. Before you even get going, or even after you've only had a month or two of sales, you may not be ready for a full set of bookkeeping to track everything. But set up a super simple spreadsheet, 3 columns, one for the date, one for the amount, and one that's a couple of words about what it is. Your Helium 10 subscription. This date, this amount, it was for Helium 10. Maybe you've got an inventory purchase. Maybe you paid a lawyer to help your entity get set up. Maybe you paid somebody like us to help things get started. But whatever those are, until you've got your whole bookkeeping actually set up, keep a spreadsheet to track those startup expenses. Again, when you don't, it's easy to miss something, and that could potentially be a tax write-off. It helps you pay less in taxes. It helps you also know how much you invested in the business to get yourself started. So by having a spreadsheet to track that, it makes things a lot simpler. So that's my third tip. Use a startup expenses spreadsheet until you've got a full bookkeeping solution. All right, so tip number 4, get some bookkeeping software. If you're not ready to hand it off to someone else yet, then at least get it started right. What's the right bookkeeping software? Something that is a full solution. So we recommend QuickBooks. The vast majority of our 1,000+ e-commerce clients are running on QuickBooks Online. A few of them are still on QuickBooks Desktop. QuickBooks Online is really the way to go though. QuickBooks is a full accounting stack. It will track your income on an accrual basis and your balance sheet correctly. Some of the other options that you see out there, GoDaddy Bookkeeping or FreshBooks or Wave, they will track income and expenses sort of, but they generally don't do accrual base, which is what you need and I'm going to get into, and they don't provide a balance sheet, which again is super important when you're buying inventory. You're spending money on inventory today, but you may still have some of that 2, 3, 4 months down the road, and you want a system that can split the difference between what did I sell this month and what do I still have on hand. And so some of those other softwares that I mentioned, they just can't really track that correctly. So QuickBooks is a great choice, or if you're in the part of the world where Xero is more popular, you prefer Xero, Xero is also a good choice. But stay away from those simpler versions, the free versions, or trying to do it all yourself in Excel. It's not going to give you the numbers you need in the format you need them to get the best results. So get the right bookkeeping software. QuickBooks Online, my first choice. Xero, also a good option. Okay, next tip. Doing the accounting correctly. There's 2 basic ways to do it, and not to get into a lot of accounting jargon, but I'm going to throw accrual basis at you and cash basis, which I mentioned in the last tip. So for an inventory-based business, which obviously what we've got here, you really want to do accrual-based accounting. So what is accrual-based accounting? Well, let me start and tell you what cash-based accounting is to compare the difference, right? So cash-basis accounting is essentially just taking what's on your bank statement and putting it into your accounting software. What it means is when you buy inventory today, you write that expense today as cash leaving your bank. And if you haven't had a lot of sales or any sales yet, it looks like you had a huge loss now. Then when you actually have sales, you don't get your Amazon payout until a couple weeks down the road. So sales you have this month partly or fully aren't going to show until next month when you actually get paid. So even though they happen now, you're not going to show them till later. So what you get with cash basis accounting is you get your expenses way early, then you have your sale, and then you get your revenue from that sale down the road. You're also missing out on everything that Amazon took out. So if you sell something for 30 bucks, all you're going to see on the cash basis accounting is the $21 or $22 you actually got from Amazon. Now, accrual basis is the opposite, where we want to line up when you have your sale with when you show your expense. So if in this month you had $10,000 in sales, we'd show that. Then we'd show the $8,000 you paid in Amazon fees. And then for your cost of goods sold, the products you actually shipped, we'd only count that expense. So if say that was $4,000, we would show the $4,000 of cost of goods sold for this month. Even if you ended up buying $20,000 of inventory, the expense would show the $4,000 of inventory that you actually shipped. That way, you're getting apples to apples monthly comparison of how profitable your business actually is, not showing a big loss when you buy a lot of inventory or a killer month when you didn't happen to buy any inventory and just got deposits from your sale. So accrual-based accounting is absolutely the way to go. It's the way we do it for our 1,000+ e-commerce clients, and it really gives you the best picture of how your business is performing. So make sure you're doing your accounting on an accrual basis. Next tip, cost of goods sold. So this is what it actually costs you for the products that you ship out. A lot of people will just put what they paid for the product, but leave out the shipping, which is not ideal. You really want to know your all-in cost of each product. So if each unit is $5, that's your unit cost, and we can use that as cost of goods sold. But ideally, what we want to do is take that unit that's $5, add in a few cents for tariff, a few cents for inspection, and $1 for shipping, or whatever those numbers come out to, and then have your total product cost be $6.50. That way, again, even if you paid for tariffs a while ago and your shipping was on your credit card, it doesn't hit till next month, you're still getting your accurate total cost to sell that product in the month that you sell it. So use landed costs whenever possible. You can either do it using a spreadsheet, or there's lots of popular software that helps you track that, including the one you're watching. But you really want to use that as a landed cost, not a unit cost. All right, next tip. Now that you put all this stuff in the books properly on an accrual basis, make sure you're using it. We have a lot of clients who we send them their reports, but they don't spend a lot of time looking at it, and then they're always kind of wondering, where am I at, or how profitable am I, or how's the business doing? Take advantage of those numbers. It's a data-based business. This business works best for people who watch their numbers carefully, sell their highest margin products most often, cull out the products that aren't doing as well, understand where their expenses are, try to keep their expenses to a minimum, and make sure they're maintaining their margins. Profit margin, the Amazon fees you're paying, your ad spend, your total ad cost, making sure you're keeping an eye on those every month, how you're doing, how the business is growing, and you're really watching that. When you're not watching it, it tends to not do as well. It tends to fall down. You don't notice, you don't course correct until it's too late. You've missed opportunity and lost money that you didn't need to lose. So take advantage of the data, not just from what comes from Amazon Seller Central, but really the accounting data that tells you truly how profitable the business is. Next thing is keep track specifically of your profit by SKU. When you have one product that you're selling, it's easy to know how you're doing with it. But as you grow and add more and more products, it's easy also to kind of lose sense of that. You see from a high level, you're profitable and you're making money. But when you've got 100 SKUs or 500 SKUs, you want to make sure that you don't have that trailing edge, that long tail SKU list of ones that you're actually selling at only break even or at a loss. Even selling at break even, or where you only make $1 or $2 per item, if you could take that same money and rather buying that inventory, buy higher margin inventory that you may be making $4 or $5 or $10 on, that's a better use of your limited funds, right? If you had unlimited funds to buy unlimited inventory, then it wouldn't matter if you only made a few cents on some products. But your capacity constrained by how much inventory you can buy, which is a function of how much cash you have to invest in it. So don't let yourself be spending money on inventory that you're barely making any money on, or worse, selling inventory that you're actually losing money on. And the way to do that is to make sure you're not just tracking your overall profitability, but literally your profit by SKU. That's something that we can have helped a lot of our clients figure out, their profit by SKU, to make sure they're being successful in all the SKUs they're selling, all the products they're selling, not just some of the ones that are the best sellers or their top sellers, and they're kind of forgetting about all these other ones that are actually dragging their business down and their profitability down. So make sure you're not only keeping an eye on your overall data, but also on your profit by SKU data. Next tip, at tax time, Amazon is going to send you a 1099 if you're in the US. The 1099 tells you the total amount of money that Amazon collected on your behalf. The trick is, the gotcha is, Amazon's 1099 number is almost always, like 99% of the time, higher than what is on anything else. That's because they include orders that got canceled. They include all kinds of other stuff that you never even see, literally never had any idea it happened. So if you had $1 million in sales that you know about, and that's your top line as far as you're concerned, and if you run your Amazon summary report, that's your top line, your 1099 may come and say $1,050,000. And if you don't know that, or your CPA doesn't know that when they go to file your taxes, they're going to use that $1,050,000 number, but there's not going to be any offsetting or enough offsetting fees and reductions in Amazon amounts that got taken out. And that $50,000 is going to trickle all the way down to look like profit. And you're going to end up paying on that $50,000 that you never got. We had a client who came to us because of that exact problem. The IRS, as far as they were concerned, by looking at Amazon's 1099, he had underpaid his taxes by almost $75,000. They wanted an additional $75,000. After we looked at it, fixed it, saw what the obvious error was, readjusted his financials, refiled his tax return, he ended up with a refund of nearly $75,000. So he went from $150,000 swing from owing $75,000 to getting a refund of $75,000 because his CPA hadn't understood that 1099 gotcha from the Amazon report. So again, it really pays to have somebody who knows what they're doing. Do your numbers, do your taxes, review what's going on, and making sure that you're not caught in one of those traps where somebody who doesn't really understand e-commerce and thinks they can do a restaurant business or they can do a doctor's office, they can do an Amazon business for your financials or your bookkeeping or your tax return. They're going to make mistakes, they're going to miss stuff, and you're going to be the one paying the cost. Last tip I have for you, tip 10 here, is consider outsourcing. Right? You've got a lot going on in doing your accounting, right? You're in doing your Amazon business, I should say, right? You've got to find profitable products. You've got to buy them. You've got to negotiate with the vendors, get them shipped to Amazon, create awesome listings, do the photography, get reviews, get traction, rise up in the rankings, see the sales coming through. You've got a million things to do. And most of those things are things you have to do. Only you can decide what products you sell. Only you can come up with your brand and your image and your logo and do the things that make your business and your brand unique. But there are things that you can get help with, and accounting is definitely one of them. So if you seem overwhelmed by it, if it's not something you want to invest the time to learn and master on your own, or if you feel like it's possible that when you do it, you're going to make mistakes, and those mistakes could be costing you money, then it might be time to consider outsourcing, and outsource to somebody that understands e-commerce accounting, not just handing it off to somebody on Upwork or Fiverr or a local person or a friend or family member who said they once took an accounting class and probably can help you out. We see those kinds of books and those kinds of financials all the time, and they're riddled with problems and have all kinds of mistakes. So outsource if time and money allows. You want to get better results, and you don't want to have to handle it yourself. And I guarantee nearly every case, we find more problems, more mistakes that we can help correct than what the cost was to actually have the project done. So you come out ahead. It's not really a cost, it's more of an investment. So think about outsourcing when you're super small. I get it. It is money that goes out that you may want to use for other things. But as soon as you get to the point where you're doing a few thousand a month in sales, 5,000, 10,000 at most, shouldn't wait longer than that, get some help with the bookkeeping and accounting so that you're not making mistakes, you're not overpaying your taxes, and you're not missing out on what the real numbers should be. So hopefully those 10 tips were helpful as you get going in your e-commerce journey, or if you're already fairly far along and just looking for some more advanced tips. And by all means, if you would like to reach out and ask us specific questions about your situation, you can email us info@capforge.com, check out the website capforge.com, or give us a call. The phone number is on the website, and we're happy to chat, happy to do that consultation and see if it's something we can help with. All right, thanks a lot for watching. I appreciate it, and I look forward to speaking with you.